Section 1 introduces the idea of a principal budget factor. When we're planning our production and sales, we might be limited by a limiting factor or a scarce resource, and we call this the principal budget factor. Now, one way that we can think about this is looking at these 5 M's. These are things that might limit our production and sales. Market demand means that we certainly don't want to produce any more than we can actually sell. So here we would actually start with our sales first and build all of the other budgets around that. It might not be sales though, it might be materials. Materials could be in short supply, and that means that we can't make any more than we've got capacity to make with the materials that we have. So in that case, we'd have to think about our materials usage first before we actually did any other budgets. This might be the case for manpower or labour as well. Machine capacity is another one that's quite common, and we can only make as much as our machinery will allow us to make, or it could be just simply money. Whatever the limiting factor is, we've got to make sure that the plans of the business are built around this factor. And that's what this chapter is all about. How do you actually go about doing this? It's actually a fairly straightforward technique to think about, and this is what we're going to go through in the next few sections. We're going to have a look now at the technique that we're going to use in order to deal with single constraints. In other words, where there is just one thing that's going to limit the activities of the business. If there's more than one constraint upon the business, then we need to use a different technique called linear programming, and we'll be looking at that later. Now, there's actually a few simple steps that we need to do in order to maximize contribution. If we've got a number of products and we can't make them all because we haven't got enough resource, then we need to prioritize, and we need to think, well, which is the product that we need to give priority to, and what order should we do the other products in? And this is what we're going to do. The first thing is to determine the limiting factor. So what is the actual thing that is going to be limiting our activity? So is it labour hours? Is it materials? Or maybe something else? Then what we're going to do is we're going to work out the contribution for each of the products, but the contribution is going to be per unit of limiting factor. So we'll have a look to see how we do that in a moment or two. Once we've done that and we've ranked the products, we're going to put them together in a production plan. In lecture example 1, we're going to apply that step-by-step process. So let's go through the scenario first. Gorgo Limited is preparing its production plan for the next week and has estimated maximum demand from its customers as follows. So you can see here that we've got 3 different products, A, B and C, and the maximum demand is going to be 50 units of each of them. Now, we've got some cost cards of each of the products that have been prepared, and you can see straight away that we've been given profit. Now, that profit includes an element of fixed cost, which remember we do not include in contribution. Now, the demand figures don't include a contract for the delivery of 5 units of each of the products to an important customer. Now, if this contract is not satisfied, then Gorgo will have to pay a substantial penalty. The production director is concerned as the materials and labour used in production may well be in short supply. Gorgo doesn't hold any inventory of raw materials, but would be able to recruit temporary workers who are equally as able as the permanent staff as required for a 10% premium over the usual rate. And the availability of materials is restricted to 845 kilograms. Now, before we get going on the actual solution, let's just have a look at a couple of things in this scenario. The first one is to do with this long-term contract for the delivery of the 5 units of each of the products. Now, this is what's known as a minimum requirement. And in questions like this one, you'll often see that there's a minimum requirement, and that limits the freedom that the company have to actually rank the products in a particular order. They've already committed to actually supplying 5 of each of these products to this customer, and if they don't, they're going to actually get a big penalty. So before we actually start to rank the products, we need to make sure that that contract is satisfied. And you're always going to do that in questions where you have a minimum requirement. The other thing is that possibly we're told there might be two different things that are actually going to be in short supply. Now, quite often you might have to do some calculations to actually determine which of them is actually going to be the one that's in short supply, because remember that this technique can only be used when we've got one limiting factor. So you'll never have a situation where there's two, it's always going to be one. Now, we're told here that they could recruit temporary workers. Now, that means that actually they can get some more labour. So labour's okay. The actual thing that's going to be limited is therefore going to be our materials. And we're told that that's limited to 845 kilograms. So when we do our solution, we're going to work with the fact that the materials is actually the limiting factor. Okay, so what we've got to do is complete some working schedules to determine the production mix that's going to maximise Gorgo's profit for next week. And the starting point is going to be to calculate the contribution per unit. So contribution is sales price minus variable cost. So the first thing we need to do is dispense with these fixed costs here. We don't need those in our calculation. The other thing to remember is they told us that the labour was going to be available, but it was going to be a premium of 10%. So this labour cost of 50 is actually now going to be 55. This one's going to be 55, and this one's going to be 44. That means that we can calculate the contribution for each of these products. So we've got for product A, 150 sales price, minus 50 materials, minus 55 labour, and that gives us a contribution of $45 per unit. If we do that for product B, it's $35 a unit, and for product C, $41 a unit. Now, if we were going to rank those products just on contribution per unit, then you could see that A would be the first one that we'd choose. However, we've got a scarce resource, and that means that we want to try and get the maximum possible contribution for every unit of scarce resource, for every kilogram of material. So the next stage then is to actually work out how many kilograms each of these products uses. We can see in the question that the materials cost is $5 a kilogram. So for product A, a total cost of 50, that means that it's actually using 10 kilograms. Product B, 30 divided by 5 is 6. And for product C, 15 divided by 5 is 3. And now we can work out what we really need is the contribution per unit of scarce resource. And this is what we're going to use to rank these products. So 45 divided by 10 gives me $4.50. 35 divided by 6 gives me $5.83. And 41 divided by 3 gives me $13.67. Therefore, if I rank them, you can see that the highest contribution per unit of scarce resource is product C. So I want to make that one first, followed by B, and then finally A. Remember that we said initially that A looked as if it was making the most contribution per unit, but it actually uses a lot of our precious scarce resource, and therefore we're actually going to end up ranking that one third. Okay, so now we've got to come up with a production plan. Now, by the time you get to this stage of your answer, you may well have forgotten about the contract units that we have to supply because we've already committed to them. But remember that there are 5 units of each product that we need to supply. So we're going to deal with those first, and let's do some workings down here to see how many kilograms that's actually going to use of our scarce resource. 5 units of A, remember that A used 10 kilograms for each of the units, and that means that that's going to use up 50 kilograms. 5 units of B, and B used 6 kilograms, so that's going to use 30, and 5 units of C, that used 3 kilograms, so that's going to be 15. Now that all comes to 95 before we've even started to rank our products. Now we can look at the demand units. So the first ranked product that we had was product C. Now the demand figure was 50, and 50 units of C, they use 3 kilograms each. That's going to use up 150 kilograms. So at this stage, let's just do a little calculation to see how much we've used cumulatively now. Remember, we've only got 845 in total, but we're okay so far. We've only used 245. So let's go on to our second ranked product, which is B, and 50 units of B at 6 kilograms is going to use up 300. So now we've used up 545. Now we need this to be 845, so it means that we've actually only got 300 kilograms left. To make all 50 units of A is going to take us 500 kilograms, so we can't make all of them. So what we're going to have to do is work backwards and say, well, how many can we actually make with 300 kilograms of product? Now they take 10 kilograms each, which means that we can actually make 30 units of product A. And that means that we've now used up all of the 845 kilograms. So let's pop these into the table. We've got 30 of A, 50 of B, and 50 of C. So that's a total of 35 units of A, 55 units of B, and 55 units of C. And the final step here is to work out what the contribution is. Now the contribution per unit is 45, 35, and 41. So 35 multiplied by 45 is 1575. 55 multiplied by 35 is 1925. And 55 multiplied by 41 is 2255. So that means that the total contribution that they can make with the scarce resource that they've got is $5755. Now, not all questions may actually ask you to calculate the contribution. Sometimes you just may have to put products in the order of ranking. So read the question carefully and see what it requires you to do. What might be quite useful to do, just to prove to yourself that this actually will give you the most profit, is to actually see how much profit you could generate if you actually did it based on contribution per unit rather than contribution per unit of scarce resource. Now remember that our contract units actually used up 95 kilograms, and the order, if we did it on contribution per unit, would be to make product A first, and then C, and then B. So 50 of A would actually use 500 kilograms. Now that would mean cumulatively there would be 595 kilograms used. If we then went on to product C, we could make 50 of C, and remember they only use 3 kilograms, so that would take up 150 kilograms, and that would take us to 745 kilograms, and that means the balance would therefore be 100 kilograms to take us up to the 845. Now that would mean that 100 divided by 6 kilograms, because that's what product B takes, means that we can actually only make 16 units of product B. So in total, we'd have 55 units of A, we'd have 21 units of B, and we would have 55 units of C. And multiplying these out by their contribution, that would give us totals of 2475, 735, and 2255. So in total, that all comes to $5465, which is lower than the contribution that we got before, which was $5755. So you can see that doing it this way gives you a lower contribution. So always remember to work out your contribution per unit of scarce resource. When we have limited resources in a throughput accounting environment, the approach that we use is exactly the same, i.e. we're going to maximise the contribution per unit of limiting factor, but the definition of contribution that we use is different. So what we're going to do is maximise the throughput return per unit of limiting factor. Just to recap, the throughput return is your sales minus your materials cost only. So all you do is work out that instead of your traditional contribution. Then divide it by the kilograms or the hours, whatever it is that's scarce, and then rank based on that. Everything else will be exactly the same. Section 3 introduces a very important concept called a shadow price. Now, a shadow price we can define in several different ways. The first is that it's the additional contribution that we can generate if we had just one more additional unit of limiting factor. So in our last example, how much could we do if we had 1 extra kilogram of scarce resource? Now you could rephrase that in that it's the opportunity cost of not having the use of 1 extra unit of limiting factor. And where it's particularly useful is determine the extra amount that we'd be willing to pay for 1 additional unit of scarce resource if it became available. In lecture example 2, we're asked to calculate what the shadow price of material will be based on the example that we've just done. Now, if 1 more unit of scarce resource became available to us, what would we actually do with it? Well, we wouldn't actually use it to make products C or B because we're already making as many as we can sell. If you remember that we made all 50 of the demand units. What we would do though is we'd use it to make some more of A because we weren't able to satisfy all of the external demand for A. We only managed to make 30 out of the 50 units. Now if we had 1 more kilogram, then making units of A would allow us to generate $4.50. And therefore that's the maximum extra that we'd be prepared to pay for it. So the shadow price of material is $4.50.